All right. Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for December 14th, 2023. I just feel like if these last 2 days, and especially today, weren't your best days trading in a long while, then I just feel like a failure as a teacher. I just can't help but say that. Because today was a big follow through day, and the symbols that we talked about yesterday followed through in a big way today. We'll start with the hybrid swing. Alcoa, 30-minute charts. So this was yesterday's early morning trade. The Fed explosion, it closed here, it gapped up to here, added a second and a third position and closed here, and that's about plus 20R. AI, big gap up on the second wave up in the morning. Uh, Entered in the usual way, strong close. Amazon, it failed to follow through further. I missed the massive sell off and missed the massive recovery. But we cashed about three in Amazon. Caterpillar, talked about this one yesterday. That's about 25R. Same thing. Big gap up, routine entry, routine second position. That's like an 8R battle drill, and then it closed like it's just going out of business. I mean, Cliff, yesterday's move closed here, gap up, bought it, sold off all the way back to the VWAP, exited, held recovery, broke across the VWAP, entered it, picked up another R. Chevron closed the big run up from yesterday. There was no follow through, so we harvested. Disney, we didn't trade it yesterday, but on the gap up and go, entered, sold at the dragon exit. Dish, missed it completely for the last 2 days in a row. I shouldn't even have it on my list if I'm not going to trade it. Devon Energy, yesterday's Kata 2 closed well. I didn't add. I ran out of capital and just took the exit at the edge of the dragon for 4R. Electronic Arts, no trade, no follow through either. Emerging markets, just off the chart good. This was a big gap up to here. Remember, we bought it yesterday and decided to hold it because of the potential for a gap. It gave us the big gap, a 3R gap, added a second position, closed it at the edge of the dragon, no overnight risk. Although I do like the way that it closed well. I think there's some more follow through, but I think the irrational exuberance is over. We'll see. Closed 5R in Ethereum. Mexico, jeez, this is the third day of the trade. So 2 days ago we got the Kata 2, and it closed well, and we added a second position, and it smashed its way higher, just off and running. Brazil, big gap up, but then little follow through. So I wanted to reduce the overnight risk and raise some cash, so we took that one for about 12R. Intel, harvested 5. IP, we talked about it yesterday. Big gap up, big follow through, standard exit at the dragon. Real estate, added a second position on the gap. It did not have a runaway move, so I felt like that was the irrationality. This was rational, and that was a perfect place to harvest. Coke, no trade. That was one that did not follow through. I missed the move down altogether. Real estate, regional banks, big gap up. I ran out of capital, and we just harvested 15R at the edge of the dragon. Mattel, No trade. I missed it all the way up, missed it all the way down. McDonald's. Um, so we got our second position in there yesterday. Today it was a micro gap up, not even really a gap, and then started selling off, and that was enough. Missed the big move down. Merck harvested. Microsoft talked about this one being the anomaly yesterday, and all it did was collapse right from the open all the way back down to support. I'm now very interested in this since it's at the 5-day low and near the 10-day low, and completely uh, was in opposition to the market trend. Something's going on there. Marijuana, no trade. Nvidia, no trade. Feels like tech is done. Clean energy, though, we harvested after the second position for about 15R. Rivian, monster move, still going. I mean, this is a trade that is 20-cent risk and entry at 18.30, and it's now at 22.40. So that's $4.10 on a 20-cent risk. 21R on the first position. The S&P gapped up and then could not hold. That looks like all the profit taking from the usual suspects, and then some residual buying for a recovery, but a huge difference between this day and the Fed day. So I feel like the irrational exuberance is over. Tomorrow there's going to be some guys getting caught with their pants off when there is a retracement. Treasuries continuing to rock. Tesla, I was able to get in after the gap up and then just took the 1-day measured 3R win. Feel like we're getting back to normal. Walmart's, this one was killing me because we had 4 positions in. There was a nice big gap up. It ran up, then started to reverse, and that was enough. I couldn't wait to get out of that one. Missed the move down. I didn't even count that one. I can't count it. U.S. Steel. Harvesting the 2 long positions. So another big day in the market, but much less risk overnight because I feel like the 2-day run is done. And we'll see what tomorrow feels like a tactical trade. As we're thinking about compound critical states, here's a general template to get your mind right. Suppose I just have, this was the day that closed. So this is a 1-day look back. And this is the high, and that is the low. And let's just say it closed right in the middle. Like that. The prices that get me interested, let's say if it was, a 10-day high may have been here, and a 10-day low may have been there, so it may have gone like this, and then ended up closing right there. This is now the yellow zone in which there is no directional bias until it breaks north of yesterday's high or yesterday's low. That's what we call the mechanical risk right in here. You can trade inside the yellow zone if you can see a 2-to-1 reward to risk ratio just inside the dimensions of yesterday's trade. The breakout is what we think of as the mechanical entry, and that's what we think of as the mechanical risk. So then the next thing that I look at is where is in the 10-day look back, where's the 10-day high, where's the 10-day low, and then I look at the top 10% as overbought, oversold. To be honest, if you're using Williams %R, you could even go top 20 and bottom 20. But in the sniper, I'd kind of restrict it to the top 10 and the bottom 10. Now, because this particular day was neither overbought nor oversold. There's no additional critical state coming from the 10-day look back because it has to get up into the top 10 or bottom 10% in order to energize the swing traders. Now, if this thing had closed up in the top 10% of the look back period, then a breakout to a new 10-day high would have the interest of day traders who see it break out of the 1-day high and the swing traders who see it break above the 10-day look back. So there's twice as much energy and emotion in price when it is in a 10-day critical state. But if the 30-day critical state, the highest piece was over there and the lowest was there, then the 30-day look back guys are asleep until price gets all the way up into this region for overbought. Now, where this becomes a compound critical state for upside location is, what if it had closed here, and so the daily close was in the top 10% of the 10-day look back and the 30-day look back. Now all of a sudden, day traders and swing traders and position traders are all watching this price level with a great deal of interest, because any breakout above there activates their lizard brain and they're thinking, aha, we've got a breakout. And all of a sudden, I have all of their money plus the day traders' money all interested in buying this thing, potentially, which means that the size of this move is going to be potentially much bigger because there's much more buying money activated by the fact that it was in a compound critical state. Now, it's also possible that something could be at a 10-day high but a 30-day low. Imagine now if the 10-day low looked like this and it had closed near a 10-day high, but maybe that was near a 30-day low. Then you could actually have sharp breakouts in either direction because both guys are ready for a critical state move. So when I'm looking at tomorrow's move on the 0-day and wondering how prone is it to emotional large moves, I'm taking a look at yesterday's move. Like yesterday was the Fed move, and that was a double plus amazing move, and it broke through a new 10-day high and a new 30-day high and a new 150-day high too. So today's potential as a breakout had all kinds of firepower, just ready to jump in and get it. The other thing that made it interesting was that the 30-day volatility was extraordinarily large, that the 30-day high and low was also equal to the 150-day high and low. That's how far it had moved in 30 days. But the 10-day range was extremely quiet because after that amazing move up, it had spent 10 days in a very tight range compression. So on the Fed day when it broke out, you had the combination of compound critical state from locations and compound critical state from abnormally quiet volatility. So you put location and volatility together, and that made the Fed day and today's move unsurprisingly large. And you saw powerful moves in market leaders in both directions. That is perfect conditions for a short-term trader. That's how you can get things like this move in Alcoa. Yeah. Hey, just my short-term memory is shot. Have I gone through all of the hybrid swings? I'm so busy talking. I think I did. Yeah, because I was on the sniper trade of the day. All right, so this is now. I want you to just notice the combination play here. So this is Alcoa, and these are swing trades entries on the 30-minute bars using our standard framing techniques. And then if you dial down into Alcoa on the 3-minute, because it's clearly in play, and being Alcoa, it's at the top of the stack, makes it easy. And I've been trading it for 30 years. Here's what the 3-minute chart looks like in Alcoa. Now, the MMRB in Alcoa is about 10 cents, or 15 cents actually, whereas on the swing trade it's about 30 cents. So I can get a tighter stop on the day trade because it's liquid and I don't have to worry about the gap. So I'm actually able, in the first run-up, after here's the close, here's the gap up, it starts moving up, a risk box off here, and I have markets money from yesterday, so it's on the move. This was one of the biggest gaps in the stack, so enter it, get my risk out quick. Second position I get after 1, 2, 3, 3.5 R battle drill. A third position, when this rolls over, I just keep the third position in the money, and the first cycle, this is within, in the first 60 minutes. So that's just in the first 2 bars on the 30-minute chart. And we pull 10R out of that one. Now, I'm not interested in shorting this thing. And all it does is find support, comes back to the Bollinger Band mean. It's still above the VWAP, so I'm not interested in shorting that thing. When it finds support and then leaves the dragon, I speculate into it with standard risk. Here's your second position at 3R. And then after these two, can you feel it grinding? That's enough to keep the second position in the money, and so that collectively earns 4R. It sells off a little further this time, but we still have a Kata 2 style formation, and we're still above the VWAP. So here's a re-entry. When it clears the emerging dragon and a new high of the day, second position, and then all out near the close, and another 5R, so that gives us 19R in addition to the swing trade R, which, including yesterday's trade, gave us 20R in Alcoa because of the large gap in our favor. So that's an example of core and turbo trading. I still have a swing position overnight with markets money, but I have no extra swing position except for the positions that were paid for with the swing market. So the day trade, that's just gravy. So day trade and swing trade in Alcoa. Okay. All right, let's take a look at the traders. Nice half an hour grind here from Hamad. And this is the Euro Kiwi. There's a standard re-entry just begging to be taken. Good short. With all the up moves today, I was hoping we'd find follow throughs on the long side. But then the long side trade, not taking that one, not sure why. This was a Kata 2 reentry, cut it short, and I think you wanted to get paid here to cover for that one. There was a reentry as it goes below the VWAP. Notice the VWAP. We should only be short on this hog. We shouldn't be taking long side trades on that one, I think, just given where we are. And plus, that's a good trade because we are now into the winter. Here's a potential long side, but there was no follow through. And we're entering and exiting inside of the dragon and losing 1.3 and 1.8. That's minus 3.3 trading in the chop when there are other symbols that are just moving like crazy. So target selection, I think, should be considered here. Pfizer minus 1.1. It's the move is in here on the way up, and then the move on the way down, and then this is grinding, and we're trading inside of the dragon. So there's no rationale for re-entries. Great job on Tesla to save the day. You're able to connect to the winning mover, and that saved the day. Kevin, the yeah, here's the my sense on this one is so this is Devon Energy. This is the open after a gap up from the overnight. That's the overnight trade, I believe. Or this is the open, sells off and goes. If that's not the overnight trade, then there's an entry in there. When it breaks above the previous resistance, there's an entry in here. Then that could be a second position, and then you make 1.4 or 2 on that one. Good job staying out of the chop. Just another example of how energy can move completely differently than broad markets. Microsoft on the 3-minute. Again, this I would have had a short side bias on this one because it's below the VWAP and it had no follow through from yesterday to the upside. It's moving in opposition to a rising market. So I would rather see you into the other symbols that had big moves yesterday. Microsoft, that we talked in the report yesterday, was had a negative bias because it did not participate in the market gains. George, let's see, where is our open on this one? Yeah, so here was the market's close, and I think it opened here and then sold off and then sold off. So somewhere in here, there's a short. This is a 1, 2, 3 entry long. That should be an immediate, when that doesn't even get through the VWAP, that should be an immediate short. Immediate. You had this much of a sell-off. The VWAP is falling. The recovery didn't even get to the VWAP. The RL10 didn't even get through the dragon. We have got to be so short right there. And then you get paid on this move and exit here. And then I think you should be short here and take a micro loss. When Walmart does not follow through, the short side bias should be in play. All right, so let's take a look at the market locations. Maybe I need to spend more time on these. So here is my 150-day look back. Here's my 150-day low. Here's my 150-day high. Here's my 30-day low. Here's my 30-day high. Here is my 10-day. So that's the 10. This is the 30. And this is the 150. Here's the 10-day high. So that is a compound critical state from location. It's if this breaks out tomorrow, then every one of those three different demographics are going to have an emotional response to a continued breakout. But if this starts to roll over and breaks through today's low, the day traders are going to be aggressive because they're going to say, oh, this 2-day run up is starting to collapse and it's going to come back halfway down the stack. And that's a big deal to a day trader. A 10-day trader on a swing trade might just be calmly taking his exits because he's enjoying entries from here and had a 10-day run up here. And guys who are getting into the market here on SSCs, they can tolerate a little more sell-off because they have so much more in hand. But my spider sense is that exits right around here are going to get the 1-day, 10-day, and 30-day guys' attention. So I believe that a day of this magnitude to the downside at 464, that erases the last 2 days of Fed recovery. So there would have to be a psychological response if 464 is violated. So what am I going to do about that? I'm going to put a short trade on right here. So if it goes through here, I'm just going to be automatically short without thinking about it. I'm not going to think about it. I'm just going to be automatically short tomorrow on a day trade if it goes below 464. In the same way that if it fails below the 10-day low, I'll have a second position automatically without thinking about it for the next 2 weeks. If it ever goes below 455, I'm short without thinking about it. If it goes below the 30-day low, I'm going to be short a third position without even thinking about it, automatically. I've already done all the thinking I'm going to do on that. If it goes below the 150-day low, I'm going to have a fourth position short without even thinking about it. When I'm framing trades on the shorter terms, I'm looking for turning points about what to do inside those regions. But I've got the broader dimensions of the turning points already mapped out. Don't have to think about it again. The multi-time frame, multi-lens analysis. So on the daily chart, looking back 30 days, now you can see a little more clearly, I think. Here's your 1-day box with your high and the low of the day, and the price closed in the upper third of that. That's good. So any breakout from there, I don't have to think about having a long bias if it does that. And if it does, my mechanical stop is going to be something like this and then quickly get it to no lose plus dinner for 2. Done. That's my rehearsal for tomorrow for the shorter term trades. I look at a 5-day low, which is conveniently near the bottom of the dragon and the PSAR dot. The 10-day low solidly in here. Bollinger Band mean is the next one. That's the reversion to the mean trade. There's that 10-day low at 454. If that breaks, then all of this is wrong. And that's that long consolidation zone where it broke to the upside because of the Fed. So if it fails below, call it 450, now suddenly the Bollinger Band mean doesn't hold. It falls down to this price level pretty darn quick. So this is panic shorts. And I'll have 2 or 3 positions short by that time. And then if it falls below the 30-day low, Katie bar the door. And then way back in the days, 30 days ago, we were talking about how important it was for the market to find its way out of this 400 to 415 range. That's what we said was the long-term support. This, long time ago, that was the compound, long time ago, 30 days, that was the compound critical state. Because it had sold all the way off from 460, where it is now, all the way down to here. And what was it going to do? Well, it turned out it voted to the upside and had a 30-day move of unbelievable magnitude. The steepness up of that is historic. The surprise in all that came from out of this consolidation zone with the Fed move that says 2024 is going to be lowered interest rates and good for the economy in order to give the Democrats a fighting chance, if you believe in, the conspiracy. But that was the nice big recovery move. This was the sideways. That was the second leg up. And now we're going to see, is there more wiggle room on this thing? We already started to see some failures. Walmart, Microsoft, Coca-Cola, McDonald's. They had their nice run. It's already done. Most of the tech did not follow through strong today. Who are the things that really worked well? It's kind of peripheral companies. Great American companies like Alcoa and CAT and IP, but not market leaders by any. This is specialty industrialists are going to benefit from generally improving business cycle next year. And regional banks. And a candidate like PBW for government money into alternate energy. All of those 5 did really, really well. So we'll see what tomorrow brings. And then I'm not going to have much overnight risk on Friday night. I'm looking at tomorrow as a one-day tactical trade and then be flat so that I can study it over the weekend and then be ready for Monday bright and early. So this is the Fed run-up on the 30-minute chart. That's the Fed announcement. That's the Fed run-up that ended here. Here's the gap up in the S&P. That was the profit taking on failure to follow through. It did not follow through. It sold off, profit taking back to the open, and then had some residual buying pressure in the last 2 hours to lock that in. But you've already seen the return to something like normalcy with that kind of profit preservation. So you got to be able to shift with the wind. Preaching too much, sorry. Bullish, quiet, dramatically oversold, favorable volatility, industrial companies in the DIA, Caterpillar, Home Depot, all crushing it. Lots of companies in the positive breakouts all the way out to 6 months. Listen to the names: Caterpillar, Chevron, Goldman, Tesla, Texas Instruments. Not Apple, Microsoft, and Walmart, but some of these more peripheral companies. ETFs, crushing it across the board. A lot of follow through in the global markets. EEM, Brazil, Mexico should still be on it tomorrow. Only a handful of auto framers. Very few squeezes, i.e., one squeeze. Oil, big directional moves. Recovery in the summer, and just pay attention to the names. Caterpillar, Chevron, Home Depot, 3M, Nike, Merck, U.S. Steel. That's not your tech leaders. Where are they? Oh, up here. Amazon, Intel, IBM. Microsoft is in the winter, for crying out loud. Broad strength. Interesting weaknesses. McDonald's, Coke, Microsoft, Procter, Walmart, Pfizer, and Oracle. That's some significant laggards. I'm always worried. So that worries me. This worries me because we've rolled over and now we're below the 10 period moving average, and the zero line is here, and that's the long term average. So there's still a good distance to fail. That's the RL30 slope rolling over. This would be a natural place to fail. So I'm just using engineering and turning points and just trying to keep it on the road. All the usual suspects. Yeah, I mean, what could possibly go wrong? Well, the 30 is rolled over. The RL10 is already overheated and it's above 1.0. And this has already reverted back to the mean. So that feels sort of like confidence and comfort. The RL30's fallen. The 10 is already overpriced. And this is no longer on sale. So back to normal rules. Let's see. My brother just said you updated RX. Just a minute. Let's see what we got here. Looking pretty good, up 14% today. Second position in. This is on the his daily.
Yep, this is a
Looking solid. Don't let that go negative. Like, I think my stop would be around 9.25. I want to keep most of that big bar today. That'd be my
yep.
guidance.
With two positions, it's a half MMRB.
And like at the first sign of weakness tomorrow, if it starts going under the close, I might just sell the half to keep that second position in the money, and then maybe take risk on the second half of your position that had the entry around 710. That's how I'd look at it. It's still easy to get caught up in the irrational exuberance of the last 2 days, but my spider sense is tingling already. I'm already over the joy. It sucks being miserable all the time, but what are you going to do? Hey, you must be doing something right. I got about another 100 names that registered on the website for interest on the Taurus Capital. So what we'll do probably is have a periodic update every week for the new emails that come in. So keep working. That's everything we got, fellas. Let me stop the recording.